The government, the US government, the CBO, Congressional Budget Office, lays out the budget for the next 30 years. So through 2054, they tell us what the debt will be, what the deficit spending will be, what the budget will be. So we can see what they're projected, and I say projected because they always overshoot the number, but what their projected rate of debasement will be for the next 30 years. So assuming that we continue at this rate that they're projecting, then we can see where the money supply will be and where those store of value assets will go. 1.6 quadrillion by 2030, 3.5 quadrillion by 2040. At the rate of Bitcoin's sensitivity to that liquidity, it should push it up to about $1 million per Bitcoin, right? That's that capture about 1.25% of the global store of value basket. 1.25%.
Mark Moss, host of the Mark Moss Show, frames asset prices through a different lens. The reason stocks, real estate, and even collectibles trend higher over time isn't because they inherently become more valuable, but because the dollar itself is worth less. In a debt-based monetary system, every round of money printing reduces the purchasing power of existing dollars. The result is that people shift their savings into what Moss calls store of value assets, anything that can hold purchasing power better than cash. That store of value pool is enormous and continues to expand. In 2010, the estimate was approximately $300 trillion. By 2020, estimates placed it at $500 to $600 trillion. In 2024, it reached roughly $900 trillion, and as of 2025, it has surpassed the $1 quadrillion mark. According to U.S. government budget and debt projections, Moss expects the debt to continue ballooning, reaching $1.6 quadrillion by 2030 and potentially as high as $3.5 quadrillion by 2040. Within that basket, growth rates differ. Gold, for example, might rise steadily at a rate of 5 to 6% annually, reflecting its long history as a haven. Bitcoin, however, operates on a very different curve. With its fixed supply and intense sensitivity to liquidity, Moss believes Bitcoin's growth could average closer to 50% per year. That compounding effect is powerful. By 2030, Moss projects Bitcoin could claim about 1.25% of the global store of value market. That slice, worth roughly $21 trillion, would translate into a price of around $1 million per coin, a milestone that once seemed improbable but now sits firmly within the math. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Overall, what we have to understand, the main driver for assets going up, when we think about the world getting more expensive and asset prices going up, it's actually that our dollar's value is going down. So I talked about the problem being the debt-based monetary system and the endless debasement. So every time they print a dollar, it buys you less. Let's think about it this way. If I had a business that was worth $1 million and you invested $100,000 into my business, you now own 10%. If I grow that $1 million business to a $100 million business, your 10% grows in value, unless I dilute you by adding more shares of stock. So the same is true, right? We don't want money. Money is not wealth. Goods and services is wealth. What we want is the things that money buys us, the goods and services. So really what we have is all the wealth of the world, the buildings and the technology and the cars and all of that, the food, divided by all the money. So your $1 equals a unit, a fraction of all the wealth in the world. So every time one new dollar is added to the system, your $1 is worth less on a percentage basis. So what happens is we have to understand that mechanism. So as they continue to print more money, it pushes up all the asset prices. You can look at, in the United States, the S&P 500 and the US median real estate is almost a perfect proxy for the M2 money supply, the global M2 money supply. So as the money supply increases, the S&P 500 and the US median real estate move up at about the same rate. Now, not all assets move up at the same rate. Some are more sensitive to that liquidity. So for example, Bitcoin is about an 8.9 times sensitivity to money supply, global liquidity. Gold is about a 1.5 times. So they move at different rates. Why? Well, Bitcoin is scarce. There's only 21 million, right? So it's a much smaller asset. It's much more sensitive to that. And so what we can do is we can go, okay, we have what we call store of value assets. So after we make money and we hopefully make more than we consume or spend, we save it somewhere. And typically we would save it in what we call store of value assets, which would be stocks, equities, that'd be bonds, that'd be real estate, that'd be cash, that'd be collectibles, fine art, that'd be gold, etc. That store of value assets, that basket of store of value assets, currently today in 2025 is worth about $1,000 trillion, about a quadrillion. Now, as they continue printing more money, that basket gets bigger. Let's just go back through some math. So in 2010, that basket was worth about 300 trillion. In 2020, that basket was worth about I think it was about 5 or 600 trillion. By 2024, it was worth about 900 trillion. Today, it's worth about a quadrillion. By 2030, that should be worth about 1.6 quadrillion. Where do I come up with that number? Well, one, that was history, but where do we come up with that number in the future? The government, the US government, the CBO, Congressional Budget Office, lays out the budget for the next 30 years. So through 2054, they tell us what the debt will be, what the deficit spending will be, what the budget will be. So we can see what they're projected, and I say projected because they always overshoot the number, but what their projected rate of debasement will be for the next 30 years. So assuming that we continue at this rate that they're projecting, then we can see where the money supply will be and where those store of value assets will go. 1.6 quadrillion by 2030, 3.5 quadrillion by 2040, which sounds insane. Now, we have to understand that not every asset in that basket moves at the same rate because some are more sensitive than others. So, for example, gold's going up at 5 or 6% a year. Bitcoin's going up at 50% a year. So we know that the basket in 2030 will be 1.6 quadrillion. Well, we don't know, but based off of the rate, based off of historical numbers, based off of what the government projects that they'll continue to increase the money supply, it should be around that level. And at the rate of Bitcoin's sensitivity to that liquidity, it should push it up to about $1 million per Bitcoin, right? That's that capture about 1.25% of the global store of value basket. 1.25%. That would put it on par to be $21 trillion. That'd be about on par with gold at that point.
Mark Moss argues that Michael Saylor did more than buy Bitcoin, he changed the game. By investing billions of corporate capital in the asset, Saylor effectively placed a global bid for Bitcoin. Moss calls it a modern gold rush. Once people saw the model, they realized Bitcoin wasn't just a speculative play, it was a scarce, programmable form of money that companies and investors could race to accumulate. The ripple effects have been enormous. Trump Media recently purchased $2 billion worth of Bitcoin, a bold move given the former president owns more than half the company. Cantor Fitzgerald, run by Howard Lutnick and now his son, has committed nearly $10 billion. MicroStrategy remains the pioneer, sitting on more than 650,000 Bitcoin today, and Japan's Metaplanet has followed with its own aggressive strategy, becoming the best performing stock globally last year thanks to its Bitcoin position. At this point, Moss says, nearly 180 publicly traded companies are competing to put Bitcoin on their balance sheets. But it isn't just about hoarding. The deeper play is financial innovation. Bitcoin, in Moss's view, is becoming a base commodity, a foundation on which credit and equity products can be built. That's what Saylor demonstrated. MicroStrategy has repeatedly raised billions by issuing Bitcoin-backed instruments, turning its holdings into a powerful corporate finance engine. Moss sees this as the future. Bitcoin not only as a store of value, but as collateral that bridges traditional finance with a digital monetary standard. Let's get back to the interview.
I think what happened is, Michael Saylor basically put a global bid under Bitcoin and started a race. Now, a lot of people want to call it digital gold, and so people want to call it like a gold rush, if you will, right? I think people have woken up to how valuable it is and how scarce it is at the same time. And so just like in the gold rush, it's a rush to go get as much as you can. And we just saw the president of the United States through his company, Trump Media, which he owns over 50% of, just bought $2 billion worth of Bitcoin. Was that like 3 or 4 weeks ago now? Howard Lutnick, his Secretary of Commerce, through his company Cantor Fitzgerald, and his son now, who's running the company and their companies, have invested almost $10 billion into Bitcoin. And so we have this bid. Everybody's recognizing that there's this like I said, gold rush, if you will. And Michael Saylor sort of pioneered this way to use public credit and equity markets to start buying as much Bitcoin as you can. I think he's got, I don't know where it's at today, 650,000, 680,000 Bitcoin, something like that. And so that it seemed like a pretty good model. We saw Metaplanet was the second company that started to do that. And by leveraging the markets in Japan to buy Bitcoin, now they're somewhere, I don't know, 14, 15,000 Bitcoin. Their stock was the best performing stock in the entire world last year. And so then, of course, other companies want to do it. And now we're starting to see, I think there's somewhere between 170, 180 publicly traded companies now that are going and rushing in to buy Bitcoin. So I think in order to understand what a good treasury company is, I would say for me, I would say, what is the one that can grow the biggest, has the best value proposition? So from an investor lens, we have to think a little bit longer term. So I have a venture fund. I'm a partner at a venture fund called the Bitcoin Opportunity Fund. We've been deploying capital for several years into the Bitcoin ecosystem, into businesses building on and around the ecosystem. Now, a lot of times when you're investing into venture capital, the money's locked up 7 years, 10 years, because you have to allow that company to grow, develop market share, and eventually go public or have some sort of liquidity event. So I typically think in terms of 5 years plus. Michael Saylor thinks in terms of 10 years plus. And so if we think about what is the long-term play here, well, if Bitcoin can get to $1 million, which I think it can, obviously, I think it'll be, I didn't finish the math. I think it'll be worth about 14 million by 2040. Now, if I could put 1,000 Bitcoin on my balance sheet and in 15 years, they're worth 10, $15 million each, right? So, but what's the actual business model here? Michael Saylor calls it the durable business model. So what Michael Saylor has shown us that he can do, he's now changed his company to the strategy, is we take Bitcoin, which is a commodity, and we use it as backing to make credit and equity instruments for traditional finance to tap into. That is the durable business model. So he's taking on tranches. He just took a $2.5 billion tranche for his new asset called Stretch, STRC, and he bought more Bitcoin with it. So I think to answer your question on what are the top 5 companies, which ones can get to that level? So there's a lot of companies that have popped up in the last several months that have grown rapidly. We're talking thousands of percent gains. But some of them may never be able to achieve that type of scale. So while they'll run super fast and hot and they could be a good short-term trade, I don't think they're the long-term investment plays, if you will. So if I was going to break this down, I think there's 3 types of Bitcoin treasury companies. So you have type number 1, which is like a micro strategy. And this would be, actually, let's start with the third type. So I would say it's a Bitcoin allocation. So I'm Tesla. Obviously, my business is making cars, and we'll take a percentage of our treasury and we'll put that into Bitcoin. So I have an allocation to it. I'm not really a Bitcoin treasury strategy company. I just have an allocation to Bitcoin. Level 2 is I'm like a hybrid. So I would put this to be like a similar scientific. So I'm a medical company. I do medical technologies, and we're also running a Bitcoin treasury strategy at the same time. So they've acquired a massive amount of Bitcoin. And then the level 3 would be like a pure play. So where the Bitcoin treasury strategy is the company. So if I'm evaluating what the top 5 are, certainly there's MicroStrategy at the top, number 1. Certainly number 2 is Metaplanet. And the reason why Metaplanet's number 2 is they're the longest one running the strategy, but most importantly, they're the first person to duplicate the strategy, but they're the first person to get to this level 2 where they're launching these preferred instruments into the space. So they're the first person who've, what I would say, have achieved escape velocity. They've built the Bitcoin stack large enough to now start selling debt and equity instruments off of it. So certainly they're number 2. Then we have to get into who are the 3, 4, and 5 players there. Nobody else has achieved it yet. So who's going to be closest, most able to do that? We have ones that are pretty exciting. I would say certainly like the one Jack Mallers is a part of, backed by Cantor Fitzgerald, has deep, deep, deep institutional pockets. They have an enormous amount of Bitcoin, massive ties into Wall Street and finance. So I'm guessing they're going to use that stack to do pretty well. I think over the long term, they'll do pretty well. I think, Pomp just launched one. They got I think it was the largest raise, $1 billion, an enormous amount of Bitcoin. Pomp's super smart. I'm sure they'll probably do pretty good. So those are a couple of really big ones. Obviously, David Bailey, Bitcoin Magazine, they launched one called Nakamoto. Their fund, UTXO Management, as a hedge fund, has basically seeded and launched almost all of these, and they've done amazingly well, like crushed every other fund out there. I would imagine they'll do pretty good. I recently joined one that just launched called Satsuma in the UK. We just had the largest raise in the UK, one of the top equity raises for a Bitcoin treasury strategy company. We started with an enormous base. I think we're going to do pretty good. But what I would say is that I think a lot of people think that there's only going to be one, like it's a winner take all event. And I just don't think that's the case. As I said, the long term durable business model here is to be able to launch Bitcoin backed credit and equity instruments into the market, financial products. In the United States alone, we have 3,900 ETFs. Those are all financial products. We have over 4,000 different types of bonds, corporate bonds and junk bonds. So tens of thousands of financial instruments. So I think we can have thousands of these companies each creating their own financial instruments. So I think there's a lot of room and we're just getting started.
What stands out is the way digital money has moved from an outsider's bet to a centerpiece of corporate and global strategy. Once dismissed as a curiosity, Bitcoin is now shaping boardroom decisions, redirecting capital flows, and even influencing how future financial instruments might be structured. With institutions pouring in, balance sheets transforming, and debt-driven fiat systems eroding trust in traditional savings vehicles, the shift feels less like speculation and more like a structural reordering of capital itself. The broader implication is clear. If Bitcoin continues to grow as both a reserve and a financial building block, it may redefine what stability and value mean for the decades ahead. Could this be the moment when digital assets stop being treated as an alternative and instead become the backbone of global finance? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.